Houston Real Estate Radio.
Welcome back to Houston Real Estate Radio. I'm Shannon Register, and today I am talking with my friend Gary Cooper, who owns Gary N. Cooper CPA PC. That's a mouthful.
Yes, it is.
So Gary was talking with us last segment about really planning your taxes and being prepared for estate taxes, which is a really big deal right now with rates looking like they're going to go up.
Yes, it is. Very much so.
When a lot of families do their taxes, it's kind of a wait till February and kind of figure it out and throw it together. You don't recommend that though, right?
I do not. We 10 times out of 10 will save our clients money through the planning process.
And when should you start planning? I mean, as a family, do you plan in December for the next year, or is it something ongoing through the year? What do you recommend?
It's an ongoing process, but really August, September is a good time because you have the last quarter of the year in case if you can accelerate expenses, defer income, make donations, look at your portfolio, and if you have some dogs in your portfolio, you can sell them and maybe offset some gains that were taken previously. So there's a lot there that should be handled during the planning process.
Okay. And I like the way that you say that it's an expense that can be controlled. Talk to us a little bit about that when you talk about your planning your taxes and preparing everything and kind of figuring out how much it's going to cost you, because preparing for your taxes can be costly depending on what firm you go with, how in depth you go. Can you address that a little bit?
Sure. I mean, the tax laws are very complex, as you know.
Yeah, I couldn't do my own taxes.
And there's deductions out there that people aren't aware of. And I'll give you a good example: non-cash deductions. A lot of CPAs, it's real simple to put $500 on the tax form because another form is not needed to be prepared to basically detail out what the non-cash deductions are. This is thrift store value, and thrift store value is not $50 a bag. So really, a bag of clothing could turn into a $500 deduction. And so and you're due that deduction. And there's a value that the IRS, they have provided tables that tell us what thrift store value is. And so that's one deduction that's totally missed by most of our clients who come in.
Yeah, I think I cleaned out my garage one year and threw away just thousands of dollars worth of stuff, and we took a $500 deduction for it.
Yes, I bet you did. And, Schedule C, people who have small businesses, especially if they have employees, having an S corporation instead, you're going to pay self-employment tax on the entire bottom line of a Schedule C. Plus, a Schedule C is probably the largest audit target for the IRS. So having a flow-through entity, and if you have people helping you, working for you, then they're generating part of your income. And that part of that income is not going to be subjected to self-employment tax as long as you're taking a reasonable salary. So that is a very large way to save taxes. We have saved some of our clients as much as $10,000 a year.
I've seen also with mortgages that for people who are self-employed, if they will set up where they receive a salary out of that company, it's a lot easier for them to get a mortgage than it is when they just show their 2 years of tax returns where they didn't take a salary.
Oh, absolutely.
So I think
you can control your withholding. What I like about that is we can go in and determine what somebody's total tax liability is going to be, and if you set your salary, then you can take all of your withholding through your salary. Okay. And so you don't have to think about it. There's some people like myself, I do not like to write an estimated tax payment. Making those payments April 15th, June 15th, September 15th, and January 15th is no fun.
Yeah, I hate those. So one of the things that is kind of different that the IRS is doing is the correspondence audits. Aren't those new? I know I haven't heard of those much before.
Well, they're not new. They're just expanding them because of manpower.
So the correspondence audits, what are they?
Well, if you receive a letter from the IRS asking you for additional information, they will identify the fact that this is an audit, and they want you to send supporting documentation for certain items on your tax return. Now, what's critical is to send it correctly.
So don't do it yourself.
No. Let me tell you, if you send your original documents, you will not get them back.
Oh, so make sure it's a copy that you're sending.
Send copies, but it's got to be well organized. It's got to be layered. It's going to have the total, the detail, where someone, an IRS auditor, can look at it and tick it off and say, okay, it's there.
You kind of have to prove your taxes nowadays, it seems like. You
gotta
have to be
prepared.
able to prove it.
You know something, and we've always told our clients, we're not responsible to audit your information, but we have always told our clients, you must have supporting documentation for this. We're not going to look at it, but if you get audited, we're going to have it.
Right. And we talked last segment about the estate taxes and how important that is to plan for those. You were talking about the changes coming. Can you just recap for us what's going on with estate taxes and why it is so important that people plan for those?
Well, sure. You've got up until the end of 2012, you have what is called a $5 million exemption. So you can gift up to $5 million and it will not be taxed. Now,
and it doesn't have to be a liquid asset, right?
No. Okay. And as of 1/1/13, it goes to $1 million. Now, you do, for businesses, have to have a valuation to substantiate the value of that business. I've got a client that actually just sold their business, but their dad passed away in 2001 and unexpectedly. And the taxes they paid, I believe, were in the neighborhood of $14 million.
Wow.
To keep that business. So it took most of the liquid assets that had been accumulated by the father to pay the taxes to keep the business.
Wow. That's such a shame.
Oh, that's a lot of money.
Yeah, it is. It really is. Any other services that your company's offering besides CPA services?
One service we're really excited about is succession planning. We have formed an organization called ForwardResults.com. And actually, it's Forward Results LLC, but ForwardResults.com is where you can find us. And it's a collaborated group of professionals from all elements of business to assist with succession planning. Now, let's think about this. There's 78 million baby boomers, and below that population, there's around 50 million. So there's going to be a lot of transfer of businesses, and what I'm afraid of in the next 10 years, there's going to be a lot of fire sales. And so if your business is not efficient, effective, and properly operating, you could be part of the fire sale.
Yeah, and to me, a fire sale is when a widow who doesn't know anything about the business is trying to sell it.
It's horrible. You get asset value instead of getting the value of your business. And let's face it, a lot of the value lies in goodwill. And goodwill has to do with customer records, profits of the business. And so I feel we have a great team. And investment banker, risk management, financial advisor, CPA, attorney, HR consultant. So I believe we can adapt to just about any situation.
So if you have a company, someone who owns a company, and they're thinking, in the next 10 years they want to, instead of leaving it to their kids, they want to just sell it and move on. This is something that can help them.
Absolutely. We can give them their options, family, employees, third party. Realistically, you should start this plan anywhere from 3 to 10 years out, to where you have basically your ducks in line. You have your system set up, you've got a clean organization, and then you determine, is the right person in place to take over this business, or do I need to go to a third party?
Okay, sounds like a really neat company. Tell us again the website.
It's ForwardResults.com.
Fantastic. And if people want to reach you because they need help with their taxes, how can they find you?
Okay, GaryCooperCPA.com or 713-243-8591. And by the way, that is my direct line. All of my clients have my cell phone and my direct line, and I answer my phone.
I love that you give great communication to your clients. That is so important. It's so difficult when you have a tax question and you keep calling, and you talk to different people, and you don't get the call back from the person you want. It's very annoying. So it's a fabulous service that you offer.
Well, I tell people that we're in the communication business. I just so happen to own a CPA firm.
That sounds good. All right, well, we will be right back just a few minutes after a word from our sponsors. I'm Shannon Register, and you are listening to Houston Real Estate Radio.